Okay. Well, welcome to our webinar today. Those of you that don't know me, I see quite a few new names on the list here. My name is Sean van den Berg. I head up client education here at PSG Wealth. Welcome to our webinar today. Today we're discussing, the topic is how to protect your offshore allowance. So just in the show of hands, there's a facility where you can put up your hands. How many of you would like to get exposure to international shares, but in rands without exchange control barriers? So the show of hands quickly. Awesome. Okay. The hands are going up. Dean, you're on the ball there. Fast draw. Okay. Well, like it's Dean and Gary. Thanks, Gary. Okay. Thanks, Dean. Looks like there's only about 2 or 3 of you would like to have exposure to offshore shares. Okay. Maybe even though the rest of you don't know what it's all about. Hence the presentation. Okay. So let's get into it. My objective after this webinar is for you to take advantage of offshore trading opportunities, number one. Number two, obviously, to do something about it. And in your trading, hopefully, to plan better. But also, my objective of every webinar is to help you to make better informed trading decisions and ultimately to help you have peace of mind. So that is my objective of this webinar. So let's kick it off with a little quote from a author. Most of you guys realize that I refer to a quote every time. Dr. Alexander Elder. He wrote a book called Trading for a Living and a lot of other books coming to my trading room. But here's his quote. To be a good trader, you need to trade with your eyes open, recognize real trends and turns, and not waste time or energy on regrets and wishful thinking. So, my philosophy always is that, either you win or you learn. We never make mistakes. We learn from our mistakes, but you always learn. So this is how I look at trading. Okay. So what is the current situation for a lot of people and a lot of traders, especially with the idea of looking offshore? 2-3 weeks ago, we had the whole Brexit and it's still in the news a bit. But for most people, most traders, I think they view trading as a bit of a gamble, especially if you don't know what you're doing. When I say most people, most novices, okay, it can be viewed as a gamble. It's risky if you don't know what you're doing, but also you're not in control. That's how I think a lot of people view trading. And bottom line is you'll start screaming at your computer as you see that little image there. Out of frustration, you give up and you quit trading. Okay, now it doesn't have to be like that. Okay, the ideal situation is, as I say, is to be in a situation where you understand the trends on the market, the trends, looking at the charts. But the idea is that you want to find the best trading opportunities. You're confident, you can bridge a gap, you take calculated risks, and ultimately your computer now starts printing you or making you money. My ultimate goal as a trader is to be a consistently profitable trader. And I think that's a worthwhile goal for a lot of people to strive for. To be a consistently profitable trader means you're making money. So that is the ideal situation. So what are we proposing today? And today we're talking about offshore investing, but more specifically trading. So yeah, we're talking about a derivative called IDX futures or international derivatives. Just some of the terminology. Some of you might be new to derivative trading. So we talk about derivative. It's an instrument that derives its value on the underlying share. So you still do your normal homework, fundamentals and technicals on the underlying share, although there might be offshore stocks. And we talk about how to use, for example, Google Finance as a tool. And we're talking about index futures. So futures have a life. They expire every quarter. So we talk about March, June, September, and December. We're at the moment trading in the December contracts. So they do have a life. They trade, as I say, the third Thursday is the JSC's futures close out. PSG Wealth, we roll a week before, okay, before the futures close out. So it'll be the Thursday before the third Thursday. It'll be the second Thursday rather. And then with IDX futures, we actually roll the week before that. Okay, so just understand that these do trade on a quarterly basis. And they trade exactly the same way as you trade a normal single stock future here in South Africa. There are slight differences. We'll discuss it just now. So there's still initial margin, your minimum deposit required, and we'll talk about that. We talk about mark to market. That's a process of daily valuation. In other words, your profit and loss is settled daily by the JSC's mark to market mechanism. And obviously the idea there is to control risk. It allows you to use your profits to enter into more positions tomorrow, but also obviously it helps you to increase the size of your portfolio or your holdings without having to add more funds because it's coming in from your profits. Okay, so what are we proposing? As I say, international derivatives. There's a link at the bottom here to a list of contracts. There's roughly about 150. You'll see on that list there's usually two contracts per stock code. So you'll have the September contract as well as the December contract. In this scenario here, I've just highlighted some of the stocks. It's not a suggestion, there's a tip or anything like that, but most of these companies you've heard of: Amazon, Apple, BP, which is listed in the UK market, but you can trade on through the JSE facility. Walt Disney, Alphabet is the Google. You want to trade Google, IBM, Johnson & Johnson, and a lot of others. As I say, there's about 150 you can trade. So what's the advantage of this? The idea is that when you want to trade IDX futures, there's two parts, and this is very, very important. First of all, you have to trade the share, and then we have to trade the exchange rate, and I'll show you some examples just now. So there's always two parts to trading IDX futures. All this happens, by the way, in the on the back end. It's very simple. All you have to do is phone our trading desk, speak to Tian on our trading desk, either drop him a call or drop him an email, and that's how you place the trade. You can't do it online. You have to phone into the trading desk, but it's all done for you. But in the next example, I'll explain how this all works. So what's important to understand when it comes to IDX futures, there is one big difference. First of all, your minimum exposure is 100,000 Rand. Okay, so like with CFDs, for example, your minimum exposure of PSG Wealth is 25,000. Yeah, his minimum is 100,000. You might say, well, that sounds a lot, but if you convert it into dollars, you'll see how this works. So that's the one difference. The other difference is that the big difference between a local single stock future and an IDX contract, remember, a normal single stock future on the JSE platform, equity single stock, is one contract equal to 100 shares. With IDX, one contract is equal to one share. Okay, so it's 1 for 1. That's very important to understand. So in our example, my first example, I'm going to want to buy 100 rands worth of Apple shares. Okay, so we take that 100,000 divided, bring my little cursor in here, divided by, I took this morning's exchange rate. I took a snapshot, it was 14.41 to the dollar. So that'll give me 100,000 divided by 14.41 will give me $6,939. Okay, divide that by the exchange rate of the dollar price of Apple shares. That was yesterday's price, was $97.42. Will give you 71 shares. Okay, I've just rounded off the 71 shares. Now, to hold a position in Apple, you'll require initial margin. In this scenario, and that comes from the previous slide with the table. And this is all in rands. The JSE will stipulate the margin requirement in rands. So in this situation, it's 186 Rand per share. Okay, so multiply by 71 shares. In this situation, your initial margin that you need to put down to have that exposure is 13,206 Rand. Okay, let me get rid of this cursor. So that's it makes it a bit more affordable for a lot of people. Here's my second example. I want to go buy 100 Rands worth of Johnson & Johnson shares. Okay, again, same scenario. I divide that by the current the exchange rate. That gives me in this scenario 6,939. Divide that by the exchange the share price yesterday was 122.92. Obviously, I did this earlier this morning. If it was intraday when the US markets would be open, Gian will be able to give you the live prices. Okay. In this scenario, initial margin required is 182 Rand per share, or 10,192 Rand. How does this all translate into a trade? Now, I've tried to take the same scenario now and show you the two scenarios. Okay, so with the costs. So in my open trade, I'm going long. I'm anticipating rising prices. And by the way, other big difference with IDX futures, we do not allow short positions. Why? Because we cannot find anybody to hold a scrip here in South Africa. So it's only long positions, no short positions allowed on IDX futures. So my scenario, 71 shares, that's the current share price, that's my initial margin, we spoke about already. Okay, so my exposure, what is my exposure? What is my outlay? Or what's the value of the transaction? So 71 shares times the share price times the exchange rate. So my exposure for this transaction was 99,671 Rand. Okay, my brokerage, now this is also to understand that the brokerage is 0.4%, okay, plus, oh, that's why I got two double pluses there, plus the VAT on that, plus the booking fee, 60 Rand booking fee. It's only on the purchasing leg. So to open up this transaction, they have exposure of 99,671. My cost is 514 Rand. Okay. On the selling side, it's exactly the same scenario. In this scenario, remember I bought it at 97. Let's say it goes up to 107.50. Okay. But also what happens, the Rand has weakened to 15 Rand 15. So yeah, we've got a bit of a double whammy there. Capital gains plus a advantage with the Rand. In this scenario, you can see the exchange rate, the brokerage. So in and out the market, this scenario where I bought and where I sold, I made 15,961 Rand profit. Less my costs in this scenario, 14,919 Rand, divided by my initial margin, because remember, that's what I put down. Okay, there's my initial margin. In this scenario, and this can be a few days. Just remember the hypothetical example. In a few days, I made on my margin 112%. That's not too shabby. Okay, so that's where the market goes in your favor. It's a profitable situation. Let's say in this situation with Johnson & Johnson, I also want to go long, buy 56 shares, $122.92 a share. There's my initial margin required. Remember, the margin always in rands. Okay, there's the same exchange rate. There's my exposure, the brokerage. Now in this scenario, I anticipated the price to go up, and the price actually fell. So now I'm in a loss situation. That's number one. Number two, the Rand gets stronger. Okay, so I made a bit of a loss here. My initial exposure was 99 Rand, and now I'm down to 84 Rand loss. So in and out the market, my total loss was 15,000 Rand. That's including the brokerage. So yeah, I made a loss of 154 Rand. So I've wiped out my margin, number one, and another 54% out of top up. Now remember, on a mark-to-market, on a daily basis, okay, the risk management system, variation margin, asks you on a daily basis to top up on your margin. So hopefully by this stage, if you haven't closed out, this is what's going to happen. You know, you're going to be in a situation where you've lost a lot of money. So it's important that you manage your risk and watch your position all the time. Okay, so I just want to highlight for you, and that's important to understand. Currency fluctuations, especially trading offshore, very important factor to consider. It gets tricky because traders need to take a view on the Rand, what is happening with the Rand against major currencies. So you have to have a view against the Rand against the dollar. Is the Rand going to get stronger or weaker? Now, if you're holding an IDX future, as a trader, you want the Rand to stay either stable or weaken against major currencies in order to profit from the position. If the Rand strengthens, like we saw in this scenario now, obviously they're eating to your profits. So it's very important to have that scenario. And I'm highlighting the risk, especially on the currency future side, on the currency side. Be aware of that. Okay. So what are the benefits? What are the benefits of trading IDX futures? So there's pros and cons, but you'll see that the advantages far outweigh the disadvantages. So first of all, advantages, it gives you opportunity to diversify your trading portfolio geographically. So you have a share portfolio here in South Africa, but I can also have a portfolio offshore. Some here in South Africa, I've got a facility offshore. Okay, so what you lose in the swings, you make up the roundabouts, for example. Secondly, you have convenience, or you have access to offshore markets available. The shares not available here in South Africa. You know, we're talking about the Microsofts and the Nestlés, all those kind of those shares, but also the industries. So you can also get into the ETFs. You want to be involved in certain sectors. There we go. You have the opportunity to do that. Remember also, with IDX futures does not affect your offshore allowance. You do not need to have any exchange controls, limits, and that kind of stuff. All that is out of the way. So it simplifies it for you. So those regulations and the whole expense of setting up a foreign trading account, you don't have to worry about it. It's all done for you. And also, remember the costs. You're having offshore exposure at a very low cost. And the major thing about trading IDX futures is that gearing. Remember that margin I'm putting down to have the exposure to that, to the full exposure. That's what makes trading IDX futures so exciting. That gearing. Okay, that leverage, bring the market in your favor. So it makes it more capital efficient. Yeah, just understand, and it could be a disadvantage if you don't understand. It's not for everyone, because remember your minimum exposure has to be under 1,000, and then the margin that is calculated on that. It's a very small percentage. It's around about 10%. The other big disadvantage is overnight risk. We saw what happened 3 weeks ago with Brexit. We woke up on the Thursday morning or Friday morning, and we saw the pound had lost 30%. So those are what I call the overnight risk. So currency risk is very important. Now, obviously, what happens on the markets overnight is out of your control. But you can see, as I say, the advantages far outweigh the disadvantages. So you guys, you might have some questions. So I've anticipated some of those questions. What are the similarities and what are the differences? The margin is exactly the same scenario. Only thing is, remember the margins in rand terms, whether it's decided by the JSE. Only thing is that the currency fluctuations is added on top. The trading fees are exactly the same, 0.4% plus a booking fee. Remember, the 60 rand booking fee is only on the purchasing leg of the transaction, okay, not on the selling leg. So it's only on the purchasing leg. If I've traded once, if I buy Apple shares now and 2 hours later I buy some more Apple shares, I only pay the booking fee once. If I buy it today and I buy some more tomorrow, okay, I'm going to pay that booking fee twice. Just be aware of that kind of stuff. When it comes to futures closeout, the automatic or the default position that we have at PSG Wealth is that we automatically roll your position over into the next contract. So when it comes to in September, we automatically roll it over into the same contract, be it Apple, but into the December contract. Okay. Single stock futures, IDX futures have to be cash settled. You cannot convert the shares into underlying shares. Okay, so that's a big difference also. So they are rand settled. And as I say, the other big difference is the currency exposure is a big difference between the two of them. Okay, and remember, normal single stock future, one share equals to 100 contracts. One contract is equal to 100 shares. Yeah, it's 1 for 1. So those are just some of the similarities and differences. Try to keep it as simple as possible for you guys, so you understand how this works. So who would trade IDX futures? So it will be useful for the speculators or the investors that are seeking offshore exposure or diversification. Remember, it provides a convenient entry point into foreign markets. Now, what's nice about it, without the restrictions and paperwork of exchange control regulations, number one. Number two, without the expense of setting up a foreign trading account, and also without the currency doubles. Okay. When investing directly into the foreign market, if you had to go directly offshore, there's complicated securities laws, levies, and all those other little things involved. What's nice about IDX futures, the intermediary bank, okay, handles all those details on our behalf. So you as a trader, at the end of the day, sitting with a clean product, then you have to worry about those kind of things. So it's just more convenient. That's bottom line. Yeah. So what are the risks? And I'm highlighting it again. Currency fluctuation. So this is not for everyone. I would say it's more for the advanced trader, someone who understands international markets, understands the processes there, number one. And number two, obviously, understands the currency. So gearing, as I said just now, is an advantage because it offers significant returns. It's also in your favor, it's that leverage, but also understand that losses can also move against your position. Okay, we saw that. That's what I highlighted, that loss position. So you must be aware of those risks. Okay, your single is not capital protected. Your exposure is not capital protected, so you can lose. And you saw that one example. You can lose more than your amount invested. Okay, there's variation margin. You have to top up more than your initial margin. Okay, so hopefully that made more sense for you guys. And again, obviously, the value of the investment will involve the foreign currency. So as long as the rand either stays stable or weakens, that's the scenario you want. So those are the risks. So let's see what kind of questions you guys have got here. Okay. Okay, any questions? Nothing coming through yet. Okay, Milan, thanks for your question. What other exchanges could you look at? Okay, remember the list that we're looking at is a JSE list. Okay, so on that list, As I say, it's about 150 stocks. BP, for example, is listed in the UK market, but you'll be able to trade it here. There's Tencent listed in China that you can trade on this list. So it's not the market, it's the list of shares. So Milan, I hope that answered your question. So about 150 stocks, but click on that link, you'll see that the list of shares available. What other questions you guys have? Okay. Okay, good question here from Milan again. Is it a good idea to get good at local shares first? And I say yes. Same as with, before, if you're a complete novice when it comes to derivatives and single stock futures, I suggest to trade shares first, understand the dynamics, what makes the share price go up and down, the supply and demand. Remember, it's always about technical analysis. And having a strategy. So to answer your question, ultimate goal is to be a consistently profitable trader. So if you can do it with local stocks, and then we move into currency futures and then into IDX futures, understand how all those things fit together. That is the way I'll approach the market. So it's that continuous learning. You never stop learning about the market. But to answer your question, I hope that start locally before going offshore. Become consistently profitably local first. Okay. Okay, Francois, pleasure, man. I hope I'm glad you enjoyed the presentation. That goes all the questions, guys. Okay. Cool. Okay, let me just wrap this up quickly. Okay, so what I want you to remember from this presentation today, you don't have to open up another single stock futures account. If you've got a single stock futures account already open with PSG Wealth, you can trade IDX futures. So it's one platform, one login, and you have access to all those instruments. Remember the advantages: you want to diversify geographically, you want to have exposure offshore, and also you want to trade opportunities not available here in South Africa. And the big advantage, as I say, you're not touching your offshore allowance, and obviously the big advantage is there, that's low costs. Okay. So if you want more information, next action steps, I suggest go click on this little link here. It gives you into more detail about IDX futures and that kind of stuff. But remember, if you want to trade, you need to phone in, and the person to speak to, your private trader, will be Tian Heidenrich. That's his contact details. You can also drop our client services an email if you're having any challenges opening up the single stock futures account. Remember, it's a separate mandate, separate process if you've got an equity account or CFD account. So it's a separate registration process, as I say, with the mandates and things like that. Okay, so guys, next week we're discussing, the topic is, are you invested correctly? And the week after that, are you tax-free? So those are the rest of the webinars for the rest of the month, and I'll be putting up for August and hopefully for September also, and also putting up our dates very soon for our upcoming seminars coming around in the middle of August. But from my side, thank you very much for being on this webinar again. Thanks for taking out your time out of your busy schedule, and I hope you've enjoyed it, found benefits out of it. Until next week, here's my contact details. All the best. Okay, keep well. Bye-bye.